Well, we're basically halfway through 2024. Who can believe it? Mortgage rates now have been firmly above 6% for over 2 years. Who can believe that? And what if I told you that higher interest rates, or at least higher rates than the historical lows we had in 2020, 21, and 22, is actually helping home prices increase? Hey guys, it's Evan Swanson here of Guild Mortgage, here to provide you with your second quarter update. Let me park myself in the corner and we will get to it. So first off, mortgage rates still hovering around 7% on a national average for a 30-year fixed rate. Mortgage rates have been as low as about 6.6 and as high as about 7.5% during 2024. And at least for now, mortgage rates remain in that range. Now, when we started the year, many economists had guessed that the Fed may cut rates 2 to 3 times this year. And based on the resilience of the economy, it looks like the Fed may only cut once, and it would be later this year. Now, as we talked about in our last quarter one summary, listen, mortgage rates are expected to follow their historical precedent. And when we see the Fed pause their rate hikes, which we think we have out here, on average, mortgage rates improve by about 3 percentage points peak to trough. Mortgage rates on average hit about 8% in October of last year. And so if history does repeat itself, we still think that mortgage rates might get around 5 and 5.5% at some point in the next 4 years. But for now, mortgage rates remain elevated, and yet home prices are continuing to stay high. Here's a graph of the S&P Case-Shiller Home Price Index, the red line being the national 20 Composite City Index, and the blue line being Portland. Obviously, Portland peaked out in 2022. We're not quite back to the all-time highs, but house prices are not crashing either. In fact, in the most recent readings, it's showing that home prices are up about 2% year over year. Now, that's after a decline in 2023, but that's after coming off a year where home prices were increasing by 15 to 20%. Now, again, how are high interest rates contributing to higher home prices? I read a super interesting paper a few weeks ago, and it was done by some economists, and it measured what's called the lock-in effect. So the lock-in effect is the idea that many homeowners out there, many of you who are watching this video, have super low fixed rates between 3 and 4%. In fact, 2/3 of homeowners in Oregon have a fixed rate below 4%. Their incentive to move is very low right now because, of course, the current market interest rate is higher. What that's doing is constricting the supply of homes on the market. And so this paper went in and actually measured it, and what they found is that the restriction in supply of homes as a result of the lock-in effect is pushing up prices by a greater impact than the depressing pressures of higher interest rates, right? So higher interest rates, normally we would expect prices to fall because of affordability. But because there's such a restriction in supply, that is basically overpowering that impact. So for now, we expect home prices to remain stable. What about seasonality? Well, currently, even though interest rates are a little higher because of the lack of supply, as we wrap up the spring buying season, the median days on market is very low. And what that means is that most houses are selling relatively quickly from the moment that they get listed. Now, this is a seasonal pattern we see normally. In the spring, median days on market goes really, really low. And as we head into the winter, that grows. We typically have a more balanced market in the winter time. So it looks like we're probably pretty close to that cyclical low. We expect to see, as we head into the second half of the year, it take longer for home sellers to sell. Now, what's really interesting and what's unseasonal right now is the percentage of homeowners who are having to drop prices or cut prices on their homes that are listed. You can see here that almost 50% of homeowners in Portland currently are having to cut their prices in order to get their homes sold. That's not an uncommon number for the winter time. You can see in the winter of 2022 and even winter of 2023, it was 40 to 45% of homes had to cut prices. But that's very unseasonable for the spring. Usually only around 20 to 25% of homeowners have to cut their prices to get their home sold. And we are almost nearly at 50%. So this is a very interesting statistics. It's meaning that homeowners may have to drop their expectations for how much their home is worth. And as we head into the second half of the year, we would expect this number to grow even higher as it has before. So to wrap it all up, mortgage rates, they're about 1% below the cyclical peak. Longer term, we still expect mortgage rates to improve, hopefully by another 1 to 2% in the next couple years. The Fed is likely to cut short-term interest rates the second half of this year. The media, I'm sure, will publish that and you'll hear about it. Home prices are higher in Portland, even though interest rates are higher, primarily because there's a limited supply of homes out there on the market. Homes are still selling fast for now. That's a seasonal thing we typically see. But more home sellers are having to cut their prices in order to get their home sold, and that is unseasonal. A lot of people are asking me, because of a limited supply of homes, how do I buy a new home without my existing home being sold? Proud to say that Guild Mortgage has an excellent solution for this. If you'd like to learn about bridge loans and how to buy a home before you've sold, reach out to us today. Thank you so much.